Good morning, good afternoon, everyone. Thanks for joining our Signworld public webinar today. My name is Jeannie Barham. I am part of the corporate team here at Signworld, and I'll be moderating the session. So for those of you who have never watched or participated in a webinar, just a very quick overview of what to expect for today. So first off, we're going to go ahead and have each of our owners who are panelists for the session introduce themselves. They're going to give an overview of themselves, their background, and a little bit about their business. And then the fun starts and we turn the floor over to our participants who have joined in, and we will announce you by name and we'll ask you if your line is muted to unmute yourself, share where you're from geographically, and then go ahead with a question for the owners to answer. We do ask you to limit it to one question at a time. If time permits, we'll go around for a second round of questions if able. I do see we've got 6 participants logged in currently. And based on when you join the session, I'll be calling your name. So Mike Andrus, you're going to be the first one to ask a question, followed by Peter and Cindy, and then we'll carry on through the other participants. So start thinking of your questions now if you're one of the first ones to come up with one. So with that said, let's go ahead and have our owners introduce themselves. And I always like to start with ladies first. So Helen, would you mind doing your introduction for us today?
Grab one from your call, Edith.
Hi, I'm Cindy Haslam.
Oh, hold on one second, Cindy. So Peter and Cindy, really quick, we're going to do an introduction from our owners first, and then we'll turn the floor over to questions. So if you can just give us a few more moments, that'd be great. So Helen, back to you for your introduction.
Sure. So I'm Helen McKinstry. I'm located in Austin, Texas. And I've been in business for 6 years. We've got our 6th anniversary of opening the doors coming up in just, I guess, 3 or 4 weeks in June. We are currently in 3,400 square feet. This is our 2nd facility. We kind of doubled our original size about a year ago. We currently have 5 employees other than myself. I'm shooting for about $750,000 in revenue this year. And probably one of the biggest projects that we've completed in the not too distant past was for a customer who was opening up a new facility. They were expanding into a new property, and so we did actually a really great monument sign that actually had 3 different signs on each side, a big LED screen, plus channel letters, plus another logo sign, and multiply by 2 on both sides of the monument. It was a good sized monument, and then we did their building signage as well. So all told, trying to remember that invoice probably came out to be about $60-something thousand. So that was a fun project, and it was fun working with the owners as they were building this building.
Awesome. And what's your background, Helen?
So I actually, I hate to say this because it makes me sound old. I retired from IBM. I retired young. I retired from IBM. I grew up there as a programmer, but became an executive of a number of software development labs, and then ended my career after several years in business consulting.
Very good. Thank you for that overview, Helen. Let's go to Matt Stein in Detroit.
Thanks, Jeannie. I'm Matt Stein. I'm the owner of Signscapes. We are located in Southfield, Michigan, which is about 20 minutes north of the city of Detroit. We just started our 4th year in business. I'm in a 3,000 square foot industrial building, including myself. There's 4 full-time employees that work in the company. Sales projection for this year is $750,000. Our largest project to date has actually been to outfit a parking garage in downtown Detroit with all of its signage. So all the interior directional signs, open, close signs, a couple exterior signs. Total invoice for that was right around $150,000 for all their signs. Prior to getting into the sign business, I come from the wireless industry, working with mobile apps.
Very good. It is crazy to think of how many signs are in a parking structure, but what a great project there. Very good. Thank you, Matt. Let's go to Roger Carroll.
Yeah, I'm Roger Carroll, and I own Cowtown Graphics and Signs. We're located in Fort Worth, which is part of the Dallas-Fort Worth Metroplex. Been in business 10 years. We are in our third iteration. We started out 2,500 square feet and doubled down twice. So we're in 10,000 square feet now. We've got 20 employees. Our 2023 sales projection is 2.5 million. One of our biggest gets here recently is we've gone to contract on a multifamily housing complex, high-end luxury apartments near the Texas Speedway. I believe it's 400 units, and our part of the contract, which is it's a $70 million contract for the developer. For us, it's $198,000. So that's that just went to contract, and we're looking forward to moving forward with a real premier property here in Texas. I spent 25 years in apparel sales, putting corporate logos on shirts, jackets, and headwear. So when I thought, when I was looking at complex, concepts to go into, I said, well, how big a stretch could it be to be putting corporate logos on glass, acrylic, and aluminum? And 10 years later, turns out not a lot.
Very good. Thank you for that overview, Roger. Dan?
Hi, everybody. My name is Dan Warner. I'm a member of the corporate team. I grew up in the sign industry within our family sign company that was started through Signworld, and then joined the corporate team back in 2007 and have been a part of the team here since. So as I address questions, if I can offer any insight outside of what our owner panel will, from the ownership side, I will, but I'll primarily be speaking from the corporate side, helping to fill in the gaps, some of what we're teaching and training today to give you some info there.
Very good. Thank you, Dan. All right, now the fun begins. So we're going to turn the floor over to our participants. Again, I'll call you by name. If you're muted, please unmute yourself and go ahead with just one question, because we do have quite a few logged in for today. So Mike Andrus, if I can ask you to take yourself off of mute, tell the group where you're from, and go ahead with the question.
Yeah, you bet. Good to be here with you guys this afternoon. I'm based right now in Richardson, Texas. My background has always been in B2B sales, consulting, and project management. So my question is, really it gets down to how much time are you actually spending in your business? Because I hear operations, I hear design, I hear customer service, I hear networking, which again to me spells nights and weekends and off regular hours. So how much time are you spending weekly, and how many weeks a year do you work?
All right, so let's add to that as a brand new owner versus where you are today, because you'll hear Roger doesn't work near as much as Matt might work and Helen might work, but we'll get to that. So
Sure.
Let's start with our newest owner first. Matt, what was it like the first year or so? What's it like today, both hours and type of activities you're doing?
Yeah, for me, I wouldn't say it's changed drastically since I've started. I still put a lot of time into networking, marketing, running the business. I do not work on the weekends. I have a family and I put the business aside on the weekends. But I do spend a considerable amount of time during the week, probably 8 to 6 every day, sometimes, but rarely log in, after the kids go to bed and do some additional work. And yeah, that's kind of been that way for me since I started the business.
Very good. Any activities you're not doing any longer that you were when you first started?
No, none that I can think of.
Okay, so still kind of the same focus. Very good. How about you, Helen?
So, it's funny, I've got this mug on my desk. It says entrepreneurs are the only people who will work 80 hours a week to avoid working 40 hours a week. So part of it is my personality is a workaholic. And so I'm a firm believer in your hours and your priorities are what you make of them. Okay. So I don't know that I would say that what I do is what is required. That said, let me try to answer the question. I work long hours during the week, and then I put the weekend aside to really be my relaxed time. I spend with my family time, my involvement with the church time. And so while I may put in a few hours here or there over the weekend, maybe, that's really not my work time. My work time is during the week. I usually get in around 8, and then just depending on what I'm up to, I might leave around between 7 or 8 in the evening. And that's just me. That's just my personality, right? But the weekends is where I just kind of put it aside.
Very good. Thank you, Helen. Roger?
In the beginning, I worked a lot, but these days, and my hours are similar to Helen's, but these days, this place is fine. I've got enough structure and organization. I've got vice presidents, and I've got managers, and I've got things where I work at like a 9-to-5 day. If I want to take half a day off, actually it's very loose because I got a laptop, right? So I can check in and help somebody who's stuck on something or give somebody some advice or something. But I'm looking more to go for, I don't want to be president of this company. I don't want to have all that. I want to be chairman of the board. I just want to come in and say, okay, how's it going in this department? How's it going in that department? The time for me of making decisions and grinding it is long gone. Now I'm far more concerned on our corporate culture, and that my people feel valued, that I cultivate this whole team kind of thing. We're all family kind of thing, and people allow me to do that on a semi-part-time basis. So it's really now's a very cool time to be a part of the business.
Very good. Thank you, Roger. Dan, your thoughts?
I think the reality is that the business will take as much time as you're willing to give it.
Yeah.
If you're only willing to give it 50 hours, it will take 50 hours. If you're willing to give it 80, it will take 80. If you're willing to give it 120, it will take that too. It's just a matter of determining what do you want your lifestyle to look like. For Matt and for Helen, they've decided weekends are their sacred time, and that's what they've chosen. So they give a little bit more time during the week. But when we look at it from a new owner perspective, generally, we would account for 60 to 70 hours a week being given to the business to get it to where you want to get. And then, as Roger has done, you start to wean off those hours a little bit. You start delegating those tasks. But as you're building towards that, what I always coach owners on is you're going to make a sacrifice. The question is, what are you willing to sacrifice? Are you willing to sacrifice your time to ultimately get the business to where you want it to go? Or are you willing to sacrifice some profitability to bring in people to delegate at a much earlier time frame? So there's always sacrifices. There's always going to be time commitments, but it's a matter of what you're willing to give it. The business will take that. You just have to be effective in that time.
Very good. Thank you, Dan. All right, let's go to our next guest, Peter and Cindy. If you can take yourself off of mute, and Cindy, go ahead with your question.
Hi, my question is what would your recommendations be when you're looking for your first property?
Okay. And are you talking location or just overall?
Overall.
Okay. All right. So thinking back to, go ahead, Roger, go ahead and start.
I've got one that I just lucked into, sheer dumb luck. But I'm in an industrial park, which most people are, okay? But my industrial park has a north-south highway, an east-west highway, and literally the trucks can roll from the garage out onto these highways and be anywhere in the metro within just a matter of minutes. Make sure that wherever you are, that you've got some main arteries that are close by that allow you to do that. There's nothing worse than having a cool shop, but you're 15 minutes or 20 minutes from the closest interstate highway, because you're going to be on the road. You're going to be out there looking at customers that call you via a lead from the internet, and it doesn't, you look like you're down the street to them. It's just another shop. But when you can take that time and condense it and be able to get to customers quicker simply by the location of your arteries, your interstates and such, that was a big deal. And I didn't really learn to appreciate it until being 4 or 5 years in, and I got customers everywhere in the metro. So the fact that I can get on a highway like that and get out and on the road is a big deal.
Okay, so easy access to the freeway system. Very good. How about you, Matt? What do you think are the most important considerations?
Yeah, I would echo what Roger said. I'm conveniently located near a couple of main thoroughfares too, so we can get pretty much anywhere in 15 to 20 minutes, and it helps dramatically with, especially in the beginning when you want to be really responsive to customers and try to get out there same day. I think proximity to businesses is another one that I look for when I found this space. Aside from, of course, being in an industrial park, I found that walk-in clients are not typically the clients that we want to work with. But proximity to businesses and just having a good concentration of those around your location, like especially from an online marketing standpoint, can help, because you're going to be most visible to those folks, especially in kind of the early stages.
Thank you, Matt. Helen?
Yeah, so in terms of location, yeah, definitely understand that you're going to want to be getting out and about, not only for yourself and going out to visit clients, but also some sort of location that is, I'll just say, quote, centrally located, right? What I mean by that is, you're wanting to reach a customer base that's within if you think about your 30-minute radius, you're wanting your installers to be as efficient as possible with their time as well. And so that also makes a difference in terms of the type of space. Yeah, light manufacturing and industrial park. What you really don't want to be in is kind of a retail business complex. And I will tell you, that's where I ended up, because I was having a hard time finding a space that met some of my other criteria, and it will cost you more, right? And I think it was Matt said, you're not trying to attract walk-ins, right? So there's really not a good reason to want to have retail space. It is more costly per square foot. And while people will come to see you for specific reasons, either they're about to award you a large job and they want to come look you in the face and make sure you're real. I've had that happen many times. Or we do vehicle wraps. They're coming to drop their vehicle off or pick it up. So people will come by, but that's not the primary customer interaction. Your primary customer interaction is over the phone and you visiting with them in person, or your installers being out there. So you really want to look for a well-costed place in a industrial park, light manufacturing, that type of thing. You may want to think about, are you interested or aren't you interested in doing vehicle wraps? Well, you don't have to decide that day one. One thing to consider is that if you want to space a drive-in garage versus a loading dock. There are ways to get around that, but that's a whole nother conversation. Much easier to be able to just find the space that has drive-in garage versus loading dock. So those are just a few considerations.
Very good. Thank you, Helen. Dan, any extra comments?
Yeah. I mean, out of what's been mentioned, 2,500 square feet, light industrial space, ground floor access. I guess what I'll add is, with your first property, you can't be super picky. There's not, given the market, there's not a lot in that 2,000 to 3,000 square foot industrial space environment. So you sort of have to take what you can get. And then when you move to 4,000, 5,000, 6,000 feet, that's where you can be a bit more picky and you have quite a bit more to select from. So the only thing I would say is that first property, you sort of have to jump on what you can find quickly and move forward from there. And then we adjust and do tenant improvements as needed to adjust the workflow.
Very good. Thank you, Dan. All right, let's go to our next guest. Tim Mahoney, if you can take yourself off and you tell the group where you're from and go ahead with your question.
Hi, and thanks everyone for coming to talk. Yeah, so I guess I wanted a little bit further elaboration on this topic, especially from the perspective of the large metropolitan areas, like I'm in Houston or, in Dallas, Austin, these kinds of, in Detroit. So is there, are there any preferences for locations in those kind of large metropolitan areas?
Okay, so thinking about, again, space and location, not building specifics, but just where you are located. Does it matter? What are some considerations? Helen, let's start with you first.
I'm located on the northern side of Austin, and yet I still, through all my digital marketing, attract people finding me from all over Austin. I could be more centrally located, but then I'm dealing with more traffic. I actually am conveniently located within about well, it's not right next to a highway, but I'm about, 3/4 of a mile or something off of Interstate 35, I-35. I'm another, 3/4 of a mile or so from another major road through Austin called MOPAC or Loop 1. So does have easy access for us to get places and for people to get to us who are looking for us. But I think what I have found to be useful to me is just being within the Austin address space. It just seems to me that, having the address of Austin versus, and by the way, being in Austin, I also serve the greater Austin area, like Roger mentioned, the Metroplex, right? So the greater Austin metro area, I'm serving Cedar Park and Round Rock and Pflugerville and yada, yada, yada. But my address is Austin. And I think when people are looking for me and looking for companies, not only are they doing the near me, but they may be looking for Austin. And from a digital point of view, that seems to have served me well. I don't know what else to add to that.
Okay, very good. Matt, your thoughts?
Yeah, I don't know that I would add too much. I just think, most people, I think to the point that Helen made earlier, most people are not coming to you, you're going to them. So, physically where your building is located, as long as you have enough space, laid out to support the business that you want to run, a mix of office plus warehouse space is what we currently have. And I chose to be in a relatively low rent district. I looked at a few places that were closer to another city that has a ton of businesses, but the rent was maybe 30 to 40% higher, and just trying to keep costs low. I opted for something that was a little bit lower end, kind of on the border of Southfield and Detroit. So it helped keep my rent low. And I would do it exactly the same again. Just from this little 2,000 square foot building in 4 years, we're a national sign company. I do work all over the country. So I don't, and that wouldn't matter if I was here, if I was in Troy, if I was in Detroit. I think that's sort of irrelevant, because eventually, your word of mouth, your referrals are going to spread. And it's less about where you're located and more about, just the type of service you provide and the customers you end up doing business with.
Yeah, and I guess I just want to pile on, if I were to do it over, I think keeping the rent cost low is really, really helpful. So I agree with what Matt just said.
Very good. Thank you both. Roger?
This particular space is in kind of a mature part of town, and the rent is really reasonable in the scheme of things. I've always kind of dreamed and daydreamed about possibly getting a spot in that really hot part of town with all the new construction and everything. But I just have to temper that with the ability to have an affordable rent in a place that has access, so I can get to that really hot part of town quick. I've always wondered what it would be like to maybe be located there. Never wondered strongly enough to even consider a move, but just thought about it.
The what ifs. Very
Yeah,
good.
exactly.
Thank you, Roger. Any extra thoughts there, Dan?
If you like rush hour traffic, locate in the heart of town. If you don't, then don't.
Good point.
Yeah. I would say, when I think of all of our maps, none of our owners are located in the heart of a city, most often because there's really not commercial real estate in the heart of a city. So, the access roads, everything else, it's most often around the perimeter. All right, very good. Good question. Let's go on to our next participant, Chris Wick. I see you're already unmuted. If you can go ahead and tell the group where you're from and go ahead with a question for them.
Sure. I'm from north of the Pittsburgh area, and just beginning to evaluate Signworld. I guess, if you were to start again today, what would be the things that would make you want to start, and what would be the things that you would like triple check before you took the time to start?
Okay, so knowing what you know today, it's not what would you do differently, but what would you know about the business differently? So Roger, let's start with you. You've had more years in this industry and this business than everybody else.
Knowing what I know today, I wouldn't have waited till age 58 to get out of corporate America and start my own sign company. I would have done it 10, 15 years earlier. That's what I would have done. So. Okay.
What do you know about it now that you didn't know then that might have been a surprise?
It's a lot of fun, we build big 3D illuminated pieces of art, And there's nothing cooler than that. Like when I'm picking my kids up at the airport, if they're coming in from out of town, and I'm driving them to the house, you know, about an hour into my tour, they're going, Dad, where are we going? You take us to the house. Mom's waiting. Because I'm taking them all over town and showing them my signs, you know, like, well, look at that. We built that here and built that there. And I don't know. I just, it's just, it's just a fun business. So I would have started earlier. That's all. I would have started earlier.
All right. Very good. How about Helen? What would you say are some of the surprises, good or bad? What do you know now that you didn't know then? Oh, you're muted still, Helen.
I don't remember if it was Ken or Jack who were saying, hey, go into all the local sign companies and introduce yourself. And I thought they were nuts. I'm like, what are you kidding? They're competitors. Why would they're not going to want to talk to me? But I did it anyway. And some of the best advice, actually, there's a lot of great advice from the corporate team, but I did realize early on and learn to appreciate it even more. I talk about build your ecosystem. It's kind of a corporate term. So, but you know, you really do want to build strong collaborative relationships with a lot of other sign businesses in your area. Hopefully some of them are Signworld, because there's sort of a special bond there, and a special motivation to help one another out. But whether or not they're Signworld, I have great relationships with Signworld businesses and non-Signworld businesses around the Austin area, greater Austin area, and even now in some neighboring cities. And that's just amazing because there are very, very few sign companies that do everything, right? And so you each build up your own kinds of in-house capabilities over time. And, you know, one of you gets a head strike and the local distributor doesn't have a new print head, but your buddy, you know, your buddy down the road does, right? And he can bail you out. So building those relationships, believe it or not, most of the people in the industry are collaborative. You're going to run into the occasional grumpy person, but they're kind of old school and they're rare. More people than I would have imagined to begin with are going to be very willing to collaborate with you and be there as a you know, somebody to work with in the industry. So early on, you know, building up that relationship with other sign companies, really focusing early on who you are, your distributors and your vendors and your installers, and really focusing early on and building up that network, or what I call the ecosystem, is incredibly valuable, right? It's hugely valuable and it will help you grow.
Love it. So Helen, I'm just going to ask really quick, anything that's a surprise that was a negative that you just didn't expect or was different than you thought it would be?
You know, it's funny, when I bought my first pickup truck for the business, I went into it with a consumer mindset, right? And I'm like, you know, looking at buying an asset, thinking about how my husband and I have bought vehicles over the years. And I had to learn to change my thinking to a business owner, right? So I'm looking at financing versus paying cash because there's a cash flow consideration here. You know, if I had to do it over, I would not have bought a brand new truck. I would have bought a really good shape used truck. What was I thinking, right? So I could have saved myself a few $1,000s there and got a very, very good workable work truck. But so that is one lesson learned, you know, just learning to think about things from a business owner perspective versus maybe what your past personal experiences have been.
Very good. Thank you, Helen. Matt, your thoughts?
Yeah, for me, I would say, you know, getting out and marketing yourself as a sign company as soon as you can would be something I would have done more right from the beginning. And networking, especially, you know, I've been really impressed with, because in my former jobs, networking was not a thing. We were an online digital business, and getting out and meeting people face to face. Like somebody told me, everybody you meet knows 120 people, every one person you meet. So there's got to be people in their network that you can leverage. So the more connections you can make, the bigger that network's going to spread. And so that's why I still invest pretty decent amount of time into networking, and it's helped us tremendously in terms of growing the business. And I've made some great connections, and I've been able to help some other people throughout the way. The one thing I would do differently, or I guess, you know, the gotcha moment for me as our company has grown and we've added people and subcontractors, has been around process. I would have invested a lot more time early on, even not knowing what I didn't know. I would have leveraged, you know, like Helen mentioned, the local sign companies to me have been incredibly helpful, as well as influential and mentors to me. The Signworld group has been. I would have leveraged that more to really get a better defined process. Because we still struggle a little bit with just, you know, getting projects pushed through our system and how we communicate. And so much still kind of relies on me that I'm trying to spend a lot of time now evolving that to be more autonomous.
Very good. Thank you, Matt. Dan, any extra thoughts?
I think I would echo exactly what Matt said. You know, as far as what owners would do differently from the beginning, knowing what they know now, most owners will state that they wish they would have started marketing sooner, whether it's internet marketing, it's networking, it's whatever, because, you know, lead generation takes time. It's not immediate. You're not selling a product that somebody, you know, they may or may not have an immediate need for it, but you have to build that relationship. You have to build that trust. It takes time to do that. So getting that started sooner is big. And then same, you know, the around the process. You know, we do start you off with templates and handbooks and processes and systems, but every one of these owners, Roger, Matt, Helen, the other 340 of them, they invested into an organization that doesn't confine them to a box. They don't have to do it the Signworld way. So each of you have to utilize that freedom and autonomy to ultimately take the systems and the processes that are there and readjust them to make them right for you. And so you got to do that early on. If you don't, it can create some stumbling blocks as you hit growth stages that you're just not prepared for. So if you can get those processes down and you keep working them as you grow, but at the very beginning, you push that marketing element way faster than you think you need to at the beginning, that's where you're going to see some of that early success really hit in.
Very good. Thank you, Dan. Okay, let's go to our next guest, Blaine. If you can take yourself off of mute, tell the group where you're from and go ahead with the question.
Hi, everybody. Blaine here from Dallas, Texas, near Coppell, Roger, so don't worry. I'm just wondering, whenever you're first starting out, how much of the work, what percentage-wise, is competitive bids? And are you treating those any differently? Are you sharpening your pencil on those, or are you just saying the price is the price?
Okay, so thinking back to the beginning days, were you competing more on price back then, or how did you price your projects to make sure you're winning them? Let's start with you, Roger.
You know, I'm pausing, Blaine, for a second to think about that, but I did a lot of networking, like Matt was referring to. So a full 66% of my business in the first 2 years that I was in business came from my networking efforts. And the beauty of that is that all those people then, once we sold them signs, would tell their friends as well. So you find about year number 4 or 5, and Kevin Holt told me this years and years ago. He said there's kind of a whoosh where there's like a jet afterburner kind of kicks in. It's that all those people, that all those relationships and all those signs you sold behind it, the more signs you can sell and get them behind you, the more chances there are going to be the referral builds quicker, and you get that whoosh effect in year 4 or 5. So what's that mean about price? Well, I'm not giving anything away, but you know, I will meet price. You know, I will compete, especially in the early years. I'm talking about what's it going to take. What are you looking for? What's it going to take? I'd love to do that order for you because I wanted to do a lot of different signs too. Now that changed a lot over the years to the point where, you know, we get a premium for our signs now. And you know, the standard communication is that, look, we're a high-end sign company and we're not going to be your lowest bid, period, the end. So if you're looking for the low bid, we're not your guy anyway. You know, and that's a way that we kind of weed through the number of leads that we get coming at us. I want to do business with people who have the ability to make a decision and who have a budget. You know, I don't want to try to sell a sign to someone who has no money and is looking for, you know, just something he can throw up on a wall and open his business with. I'm looking for people who are serious about their businesses and want a quality sign. So it's all over the board, but in the beginning, certainly you're a little more hungry than you are down the road.
Very good. Thank you, Roger. Helen, your thoughts?
You know, I think initially it was us trying to figure out what the local market was. right? So while we could, do a lot of research and understand what, pricing ranges might be around the country, every market's a little different. And even the different types of signs you're targeting within a market can be different. So for example, in many products, very comparable to other people in other cities. But for example, in Austin, vehicle wraps is a very competitive market. So for us, it was about, I probably was a little bit more willing to come down in my prices as I was trying to figure out what that sweet spot was. I remember every single vehicle wrap initially we were losing, every single one. Like, well, something's wrong here. So we did a little bit of research. Turned out that of all the prices in a particular vehicle, we were at the very highest of all the people we checked in our area. Well, clearly that's not where you want to be, nor did I want to be the lowest. So I'm never necessarily seeking to be the lowest bidder. I don't mind being there if that's how it worked out, right? That ends up being a bit of an advantage. But that's not what I'm seeking. Like Roger, I'm really looking at building a relationship and providing a quality of service. Now, to Roger's point, where was I at the beginning versus where am I now? You get a lot pickier over the years, right? And so my target market as I've matured is to really look at customers who are engaged, that are really wanting value, who are wanting to build a relationship, and those end up being the best kinds of relationships and projects for us. Early on, I was never trying to necessarily be the cheapest, but I was probably more willing to come down because I was trying to get more experience and I was trying to learn what the market would bear. And I wanted to get in, right? I wanted to get in. I wanted to be able to play so I could learn and grow from there. So again, I never want to target being the cheapest. I think you set yourself up for other issues if you're targeting always being the cheapest, unless there's something else that you're also trying to get out of that particular transaction, where maybe that time around it's you've got a reason to do it.
So more strategically in that situation. Very good. Matt?
Yeah, I mean, early on, we would take almost anything that came our way. You want the fuel that's gonna drive that ship. As we grew a little bit and even into the first few months, I think we started to learn that pricing is very dynamic in this industry and can vary on a lot of factors, type of sign, type of customer. And you kind of learn that as you grow into it and you start interviewing your customers a little bit differently, I think, as Roger and Helen both sort of alluded to. There are definitely situations early on and even today where if there's a new potential customer that has a lot of upside reoccurring revenue, back to the Signworld, like what they taught us in training, 80% of your business should come from 20% of your customers. So if there's an opportunity for a customer where we can, maybe come in with a slightly lower bid or slightly lower margin on something, but we know that we can show them good service and we can win that customer for the long term and they're going to bring us a lot of repeat business, then I'd be all about doing that kind of stuff. If it's like Roger said, the one and done who just wants to sign on their business, we're not going to discount that. We're going to charge more of a premium for that because there's really no potential for reoccurring revenue there. It also depended a little bit on in-house versus outsource. Obviously, we have a little bit more room to play with our margins on in-house production because we're making 80-85% on a lot of those projects, whereas we've only got 40 to 50% on vended stuff that we can play with. So it depends on a lot of factors, but we really look for customer type where we drop some of those discounts.
Very good. Thank you, Matt. Dan, any extra comments?
No, I think owners answered it pretty clearly there.
All right, very good. Sheree is going to start some slideshows in the background. We're going to continue with the question and answers, but in the background without any noise, there'll be some slides shown that kind of show the type of in-house work versus outsourced work in the beginning. It also shows all the unique types of sign projects that are out there. And then also some profiles of some of our owners and a little bit about our owner community. So those will be playing in the background while we continue our session here. Let's go to our next guest, Dave Frey. If you can take yourself off of mute, tell the group where you're from and go ahead with your question.
Hi, good afternoon. I'm David Frayne. I'm from the Detroit area, like you, Matt. I'm over in Plymouth, so not too far away. And like you, Helen, I recently retired from Ford Motor Company after 30 years, and I'm looking for career number 2. I'm excited about Signworld and producing a product instead of just a service. My question, thank you, owners, for joining us this afternoon. I appreciate it. My question is around finances, and I'm struggling with the rather hefty upfront $260,000 to get started, and then I hear a few of you say it's 75,000 in revenue each year, that payback takes a long time. Can you elaborate on the financial aspects of getting started? Year 1, year 2, year 5, what does that look like?
Okay. So I don't think any of them said 75,000 in sales. I think I heard 750, but that's okay. So maybe
Oh, I'm sorry.
that's okay. It's a good,
I was
it's a good
hearing
question.
75 in revenue, and I'm like, whoa, wait a minute.
Yeah, that's a little low.
Okay. Okay.
I
Thank
would-
you for.
No, but it's still a good question. So we'll still go ahead. So maybe you can share what you're comfortable sharing, of course, owners, but maybe share what your, first year sales look like, your second year sales. And if you want to share anything related to your profitability, feel free to do so. But thinking about the initial investment and that payback, how did you justify that yourselves? And, now where you're at today, what are your thoughts about it? So let's go ahead and start. I'll go with ladies first again. Helen, let's start with you.
Boy, that is a large topic. So my first year was 6 months, right? So I just look at it from a calendar year point of view. And, I didn't make an awesome amount the first year, and did not profit at all that first 6 months, I should say. I also made a very deliberate decision that it was a little different from the Signworld model. Is you start with yourself and a sign maker. I started with myself, a sign maker, and an operations manager. And that itself is its own long story. I took advantage of an opportunity that was not going to be there a long time, and I decided to hire that person earlier than I had planned. And I leveraged that person to build the processes and systems in my business faster, right? So the first 6 months, I made, well under 50K, right? But the second year I made, I don't know, well over 250 something. And the third year I 400 and something thousand. So, I mean, it started growing pretty quickly from there. It took a little bit of a dip during COVID. Other sign companies will tell you they grew during COVID. So, that's that was just my personal experience here. But, and it does take a little while to get above the fixed overhead, right? So you've got your job or gross profit, which is sort of your per project profitability that you always want to be looking at to kind of optimize. But then you've got some fixed overhead. You got your rent, you've got what you're spending on marketing, which is worthwhile. You've got your, your payroll, you've got some fixed things. And so, I know some people who've hit profitability, hit month on month, right? For a particular month, they were cash, they were positive maybe within a few months. For me, it was month 13 was the first month when I actually hit, net profit. So it's going to vary a lot. It is worthwhile talking to a lot of different owners to get all of their unique experiences. Again, for me, it was month 13, and then month 14 and 15, not so much, but then month 16 and 17, and so it'll go up and down. You'll have peaks and valleys, but, you do need to get to a point where you're kind of mastering your fixed overhead, just looking at what overall you're trying to achieve. So for me, I was willing to sacrifice some of that early on profitability to be able to invest in putting the right building blocks in my business, including hiring that additional person early on who really helped me get some of the systems in place that were so important for us growing more quickly.
Very good. Thank you, Helen. Matt?
Yeah, for us, so I started the company in March of 2020. So I'll kind of caveat all of this with that right before a global pandemic. Still managed to carve out about 160,000 in revenue our first year in business. So definitely pleased with that. Second year grew fairly nicely over that at about 250,000. Last year we did $500,000, and this year on track to do about $250,000. For us, it was about, like Helen mentioned, there's definitely an ebb and flow to profitability when you're getting started. You might have a couple big projects finish in a month that's really going to contribute to your bottom line, and just because of the length of time, sometimes it can take 4 or 6 weeks to wrap up a project. You might have months where you dip down. So month 7, I think, was our first actual cash flow positive month. But then it did ebb and flow up until about month 18, where it felt like, profitability was much more consistently break even, if not profitable for us. Yeah, it's kind of been our journey.
And how did you get over the, upfront initial investment, Matt? What was your thought process there?
For me, I guess I've been an entrepreneur before. I know what it takes to start a business. I wasn't too, I guess, held up by the fear of that. I just knew that I was going to be successful and had the support of friends and family, and just kind of never, I guess I looked at it as an investment in the future of my business and my family, and just kind of plowed forward.
Okay, very good. Let's go to Roger.
Yeah, that I had, like Helen, I had kind of a short stub year. That first year, I think maybe did 40,000. Then second year, a couple 100,000, and then the third year, 400, and then we had a 20% growth for the first 6 years. Actually, we grew 60% in 2022 here recently. It was a big year for us, strangely in the middle of COVID. But I think in the beginning, the way I got an SBA loan, and it was a Section 504. You know, you draw it down for 2 years, so you don't take all the cash at one time. You just draw it as you need it. And we drew it down to a certain level, and then in that 2-year period, and then you got 5 years to pay it back. So it's that first 2-year period that you're worried about that cash a lot. But I didn't. I wanted something in my back pocket, and I looked into the 504, and it was, you know, I don't know, a 3% loan of some kind. It was very reasonable. So I financed, you know, because I had financed things in the past, and I wasn't worried about going to a bank and asking for money, especially from an SBA-backed point of view. They're more than willing to lend, and it fit like a glove. You know, the financing fit like a glove. I paid it all off, and it's all history now. But it got me through those first couple of years. You know, I mean, you know, you could sleep better at night.
Absolutely, very good. Dan, comments from you?
Yeah, you know, when we look at our track record over the last couple of years, average owners in their first year will do about 240,000 in first year revenue. Second year, about 450,000 in revenue, and third year at 615,000 in average revenue. So it at least gives you some track there to kind of look at the revenue. The matter then is, you know, what is the profitability in that? And that's all determined based on you and your pricing and how much you pay attention to your margins as you're pricing. But you know, my advice to everybody, you know, looking at this, is have at least a year's worth of personal money set aside to cover the lifestyle while you're getting the business to where you want it to be. You know, much like Helen, you know, took a little bit longer to reach profitability. I really look at it from the standpoint of you've got to wait to start taking money out of the business until the business can actually support the lifestyle. So if you do that too soon, you start suffocating the business. In this case, you want to have personal finances set aside to be able to, you know, live life while you get the business going. But at some point it does become profitable. So.
Absolutely. I'll just add 2 more comments. You know, I always share with prospective clients, this is not a business opportunity to consider if you're not in this for at least 5 years or more. Like the ROI on this business really, you know, requires a little bit more of a runway to make sure you're paying yourself back and getting, you know, lost earnings opportunities that you could have earned elsewhere long term. So that's one thing, is just realizing this is a long-term investment, not a short term. The other one is because Signworld does not charge royalties, there's no you know, percent of your revenues that you're paying ongoing. So it might be a little bit more upfront, but again, as you're looking, you know, 5, 10, 15, 20 years, that can make a big difference as well. So those are just 2 extra comments I'll share. All right, let's go to our next guest. We got 2 more left. Brian Silverman, if you can take yourself off of mute, tell the group where you're from, and go ahead with your question.
Hi, this is Brian Silverman. I'm located in central New Jersey, and thank you for the time today. My question, you've touched on it in a couple of answers, but it's the competitive environment. You know, very, you know, especially here in the Northeast, very competitive, a lot of both small shops and larger shops. I'm just curious on differentiation and how you compete there versus the other players. My assumption is a lot of it has to do with just fostering and establishing and fostering strong relationships and a strong service model. But I don't know if there's anything in addition to that that you think Signworld brings to the table that you guys leverage.
Awesome. Great question, Brian. At least one person usually asks about competition. So thanks for asking. And each one of our owners are in competitive markets. You know, the thing about the sign industry is there's sign companies literally everywhere. So let's think about differentiation and how you got past the competition. So Roger, let's start with you today or on this question.
Well, some of my differentiation is on the screen there for the last few signs. So we do illuminated interior signs, and we love doing those. You know, you hear this, the service bar, honestly, in the sign, I mean, there's a lot of sign companies. And recently I've tried to, and successfully have been able to develop a new business segment in multifamily housing. And I started asking some of these developers, you know, I was going, I'm new to this business. I'm so appreciative that you trusted me with your new project, your 300 apartment complex, and you know, your $50 million development. Basically, they'll say, well, I just want a sign company that doesn't suck. Now, that's weird, you know. And I've talked to other people about that, and they say, you know, it's much the same. So a lot of times when I'm asking a new customer, so how'd you find out about us? Well, you know, my next door neighbor told me, you know, about you, said you guys were the best. And, you know, I've tried a couple other guys and they just haven't worked out for me. I'm hoping that the experience is different with you. And honestly, that's what I tell owners that come through my operation here. It's like, you know, all you got to do is return the phone calls. All you got to do is do what you say you're going to do. All you got to do is be cordial. All you got to, you know, it's not a high, you know, yeah, there's a lot of competition. There's a lot of shops and everything. But I think if you maintain a service level that a lot of us do coming out of a professional situation, having worked in corporate America for a number of years, you're used to a certain level of professionalism that hasn't always been present in the sign industry. And for that reason, it makes us corporate refugees, you know, kind of good at this, you know. Helen's grinning. She knows exactly what I'm talking about. So that would be, you know, my response to that.
Thank you, Roger. Helen, let's go to you next.
Yeah, so I mean, I could echo everything Roger just said, but let me give you a few examples that I think are good examples that back up what he said. There are so many customers that we talk to that, first of all, I'll hear like, oh my God, you know, we'll answer the phone, we'll talk to them, we'll start to engage with them, we'll ask them questions, and we get feedback that says, wow, I called 5 companies, 3 of them didn't answer. You know, one, you know, answered and just slapped a price, you know, at me over the phone. You're the first one that has really spent time with me. First of all, you answered the phone or you called me right back. I mean, again, to Roger's point, seems like a low bar. It is an important one. Okay. Be responsive, answer the phone, call them back immediately, and then engage with them. So I've also had so many examples of winning work just because of how we engaged with them. We'd have clients that would say, you know, we'd be on the phone with them for 20 minutes, really talking through, you know, what are you trying to achieve and what's your timeline? And, you know, how might you want to look at this? And are you going for upscale? Are you going for functional? You know, what are some of your considerations? And at the end of that conversation, like, you know what, I've already decided I'm going to go with you. And they haven't even seen our price yet, because they said, you spent time with me, you listened to me, you asked me really great questions that I hadn't even thought about, you know, and of the few people I could reach at other companies, they just wanted to give me a price. That's all they wanted to do. You know, and those are the ones that even bothered to call me back. Most of them I haven't even heard from. And so we also had a situation last year where, I guess it's a problem you want to have. It frustrated me as a business owner. We couldn't be responsive enough. We had so much incoming. We couldn't respond to it as quickly as I wanted to, but we just got sort of honest with our customers. We said, you know, we would love to help you. It's going to be a couple weeks before we can give you a quote. And that killed me as a business owner. Best thing we could have done was to be honest with them. So we said, look, we would love to help you, but here's where we're at. You know, we understand if you need to look elsewhere, but we'd be happy to call you back in 2 weeks when we've got time to really dig into this and chat with you. And we had people that would say, oh, look elsewhere. And they'd call back and they'd say, I can't get anybody else who can do any better. And or they're not giving me a straight answer. They won't give me a straight answer. You've given me a straight answer. Put me on your queue. And then we would call them back in the 2 weeks and they're like, thank you so much. We are just so happy to be talking with you. Customers wait. Customers will pay more. You will win their hearts by how responsive you are. And then yes, how you behave in delivery will definitely result in then you getting new phone calls from new people who read the Google reviews that resulted and or got a word of mouth referral, and they're wanting to call you and they're wanting to work with you because they heard the experiences from other people. That level of engagement and responsiveness, there's your differentiator.
Love it. Thank you, Helen. Matt?
Yeah, I can't emphasize enough what Helen just said. I mean, we get calls from customers all the time, and the majority of them have never embarked on a sign project before. So one of the things that sets us apart is that consultative approach, hearing them out, listening to their needs, and translating that into something that's going to add a bunch of value to their business, to their livelihood. And a lot of times you're dealing with people's personal businesses here, and they're obviously pouring their heart and soul into that. So the more you can kind of emphasize that and echo that, and really raise the bar when it comes to the level of service, as Roger said, it is set pretty low. There's tons of companies around here who don't respond. They don't even have an online presence. I mean, we get phone calls all the time about, oh, I saw your website. It was great. The examples of your work, we think you can handle this project. And of course we can, let's talk. And then we kind of get into more of the details, but yeah, being responsive, having an online presence, being consultative, for us has won us a lot of work. And I even have my top customer who I do work for all over the country from time to time will go direct to a sign company in the local market. And it's happened on more than 5 occasions where he's canceled work in progress with a local sign company, called me all the way back in Detroit to get work done in Nebraska because he can't get answers out of people over there. Through the power of the Signworld network, I can leverage all these owners and get that work done. So it's not that complicated. it's basic service and business.
Very good. Thank you all very much. All right, for time, we're going to go right to our last participant with a question. Bill Hollander, if you could take yourself off of mute and go ahead with the question for the group today.
I'll be honest with you, I'm just taking it all in. I'm at the very beginning stages of thinking about this, and I'm loving the input that everybody is giving, but I do not have a question off the top of my head right now. So thank you for the chance.
Absolutely. Thanks for joining us today, Bill. A lot of great questions have already been asked and answered. So with that, it is top of the hour, so we're not going to open it up for additional questions from the group today. So first and foremost, Helen, Roger, and Matt, thank you so very much for taking time out of your busy days to be on the call and sharing your insights and perspectives. We really, really appreciate you doing that for us and for our participants today. And to our participants, thank you for joining us. Thanks for having the interest in exploring Signworld further. We look forward to the ongoing conversations with you to help you better understand who Signworld is and what the sign industry is all about, and helping you make the decision if this is the right fit for you and your next chapters in life. So with that, I hope everybody has a great rest of your Wednesday, and thanks again for joining our session today. Take care all. Bye-bye.